All right, let's dive into a major puzzle that's happening in the financial markets right now. We're seeing this incredible bull run, but it feels like almost everyone is scared of it. It's a huge contradiction, and today we're going to break it all down.
So this is the big question, right? On the surface, the numbers look absolutely amazing. But if you dig just a little deeper, there's this weird current of anxiety. So does all this fear actually make any sense?
And this really lays the whole disconnect bare, doesn't it? In one column, you have the cold, hard facts, record highs, solid economic signals, you name it. And in the other column, you have pure emotion, fear, and a whole lot of uncertainty. It's like a tale of two completely different markets.
And look, this isn't a rally that's just being propped up by a few giant tech stocks. No, we're seeing strength across the board. The Russell 2000, which is a fantastic indicator for the broader U.S. economy, is hitting all-time highs. Same for the equal-weight S&P 500. That tells you this rally has some real depth to it.
But, and this is the crazy part, despite all of that positive data, sentiment indicators tell a totally different story. When you actually poll investors, you find this really surprising level of anxiety. The feeling out there on the street just doesn't seem to match the numbers we're seeing on the screen.
So you really have to ask yourself, is there any logic behind this fear? It seems especially strange when you remember that the Federal Reserve just delivered what should have been seen as incredibly bullish news for the market.
Okay, to solve this puzzle, we have to look past all the noise, all the sentiment, and focus on what is probably the single most powerful driver in the market today: liquidity. This stuff is the real fuel in the tank.
So what exactly is liquidity? Well, think of it simply as the cash that the Federal Reserve pumps directly into the financial system. It's the juice that makes the market go, and more juice means a massive tailwind for pretty much all assets, pushing prices higher and higher.
And here's the kicker. This isn't happening in some weak, struggling economy. The Fed is adding all this fuel to an engine that's already running strong. I mean, the latest estimates show the U.S. economy is expanding at a very healthy 3% clip.
So when you put it all together, you have this incredibly powerful recipe for a bull market. First, the Fed is cutting rates. Second, it's injecting over $30 billion in new liquidity. And third, all of this is happening inside an economy that's already growing. That is a seriously potent combination for rising asset prices.
Now, this isn't just some new theory we cooked up for today's market. Nope. There is a timeless lesson from financial history that explains the dynamic we're seeing right now almost perfectly.
And here it is. It's a classic Wall Street saying for a very good reason. It's almost always true. History shows us, time and time again, that bull markets don't just get tired and fade away on their own. They're usually ended by a specific, powerful force.
And that's really the bottom line here. The same force that fuels the bull market, yep, the Fed, is almost always the one that ends it. Bull markets die when the Fed restricts liquidity, when it turns off the money spigot. But right now, that spigot is cranked wide open.
But of course, no market is ever risk-free. So what's the big short-term threat that has people so worried? Well, it seems to be centered around a political question mark.
The main risk people are talking about is a potential Supreme Court ruling that could throw current tariff policies into chaos. And yes, that could absolutely cause some short-term volatility, no doubt. But the counterargument here is fascinating. The most probable response from the Federal Reserve would be to fight that volatility by, you guessed it, injecting even more liquidity into the system. It's a weird paradox, right? And this whole story isn't just about the stock market. This rising tide of liquidity, well, it's lifting a lot of different boats.
Let's just take the crypto space. This liquidity tailwind is a huge factor pushing prices up, but it's not always a straight line. Bitcoin, for example, is kind of running into a technical hurdle right now. A massive wall of options contracts sitting around that $94,500 level. This is creating a temporary ceiling that all this liquidity-fueled buying will have to break through.
So, in a strange way, you end up with two totally different forces both pushing assets higher. You have the fundamental driver, all this massive Fed liquidity, and then you have the emotional driver, all this widespread fear, which keeps people on the sidelines until they just can't take it anymore and have to chase the rally, adding even more fuel to the fire.
So that's our final thought for today. We have a fundamental reality, liquidity, and a powerful emotion, fear, and right now, they're both pushing the market in the same direction. Understanding that difference is the real key to navigating what comes next. So the question is, which one are you going to be watching?